Yeah, hello and welcome to another update video on Solana. The price is still moving here in a range, very choppy range, and we haven't seen much movement since yesterday. However, it really does look again like a five-wave decline. So I continue to view the risk as very high that the market is going to break to the downside just because the bears seem very strong. Most recently, all these dips looked like five waves down. Wave one here. This also looked like five down, but it turned out not to be a five wave move down because of the higher high. This also looks like a five wave move down. So what I've done today, I've added a micro resistance area already in our member update earlier today. This is the zone to watch for today. Our micro resistance for today, it's between $139.66 apologies, 139.66 and $143.11, and this is our zone, that we are watching here for a possible reaction. So if the market bounces at any point now and moves into this area, this is the zone we have to observe for a reaction. Of course, a reaction isn't guaranteed, but I can tell you that the risk is high that this is a wave one to the downside. We get a wave two bounce and then could start a third wave decline from there. So basically, it could be following here the orange pathway to the downside to fill in the third wave. So that's the risk here, yeah, because we have five waves. It just doesn't look like a clearly corrective pullback. Super weird movements. I mean, what does that tell me? It tells me the market hasn't made a decision yet, right? Yesterday, the market moved up in an impulsive way, but only locally because the foundation isn't impulsive. This here was clearly three waves, right? So in the orange count, this was clearly just an ABC structure to the upside in wave two. We could now form another 1-2 setup to the downside. The risk for downside is just extremely high, folks. Yeah. But we have very clear levels to watch. So once the market breaks above $143.11, well, that would be our first indication that the bulls are starting to take the lead. At least they are starting to. And at least short term, yeah, and that the market might at least try to test again the Thursday high of last week around $147, which is also an important Fibonacci level. And then ideally that we fill in the blue count, the blue extension. I mean, the blue count became more probable yesterday, but it didn't get fully confirmed because the price did not break above the swing high from last week. So this is still a very clear three-wave move to the upside that we've seen from the low of last week, 7th of December. Clearly three waves up. And as I always say, when you have a corrective base, the move to the upside cannot be an impulse. And if it's not an impulse, it can be a correction. It could be a diagonal pattern, that's the blue count, but you can't trust these. So that means be on the side of caution. This is not an easy structure to trade. If you're trading this actively, then the likelihood is high you get chopped because your movements are very fast. And at every juncture, we get rejections, or we might move above initial resistance and get to the next resistance and get rejected there. And so when you think, oh, it's bullish now because we broke above initial resistance, it's going to be a bumpy ride. I mean, even if we go higher, I can guarantee you this is going to be a bumpy ride. So that's how I see at the moment Solana. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then check out our X channel as well for additional charts, updates, news, and much more. So you get additional exclusive updates here. I leave a link in the comment section. Thanks so much. Bye-bye.